Hello viewers, in this video I'll be going over gold miners, ETF ticker symbol GDX. Today we are up 36 basis points and we have about 1 hour and 30 minutes left in trading. On the 1 hour chart we are approaching positive MACD and we may see a minor reversal in hand. On the 4 hour chart we are still negative MACD, however we do see a convergence shaping up. And on the daily chart we are on no support, or I should say on no support moving averages. We still have a few percent away from the 150-day moving average, which I believe will be the next possible support in the next coming days. So I'll mark that as our immediate support, and that is around the price of $25.55. So at the moment we are nowhere, or one could argue that we bounce off this price range around in August 1st, September 13, October 1st, October 16, and today. One could say we are currently at support. I don't think so. We may possibly try to extend out and bounce off this support, and then let's see if we make a reversal. So if we do make a reversal, I do see reversal being the 50-day moving average. As indicated in the past, we failed to break back in October 8th and October 25th and October 31st. That is around the price of $27.44. So if we were to move on higher, that price movement is roughly around 3.9% to the upside, and to the downside is roughly 3.1% to the downside. So the forecast model in the link below is now free to choose or free to use. And if you click the selections, we have now GDX, GDXJ, JNUG. Yeah, we got all the triple leverage ETFs, NUGT and DUST. So if we were to make configured settings, you got the results for these other ETFs, and do enjoy in the link below, so check it out. So back to the forecast model, I'll go day by day where gold miners will head to next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally the model that is the best match to the current trend. We have the current trend right here, and below is the trend that I believe is the best match. And this trend dates back to February 27 to May 23rd, 2014. So let me point out why these two charts are similar. So what we have in the beginning of the trend, we average above the middle Bollinger Band, and then we proceeded to touch the bottom Bollinger Band once there, and then we see a few instances where it does touch the bottom Bollinger Band multiple times. So we see these patterns shaping up, and we start to see a similar pattern in the trend in question. We average above the middle Bollinger Band, or touching the upper Bollinger Band. We touch the bottom Bollinger Band, and then second time right there. And lastly, right towards the end is our third instance. So we have about 1, 2, 3, 4 points. We also have 1, 2, 3, 4 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. And the forecast model that we just examined was February 27th to May 23rd, 2014. Back then, gold miners continued to slump down. It was down roughly around 4.6%. So I do see gold miners slightly dip lower, possibly bouncing right off the 150-day moving average. I do see that as our real next support. So I do see that in the next coming days. If you enjoy this content, feel free to like, comment, subscribe, and thank you for watching. And also, this forecast model is now in the link below, so check it out.